In this presentation, we're going to record and match transactions where we have one deposit and two invoices with the help or use of the bank feeds. In other words, we're going to see a deposit go through with the use of the bank feeds, and we need to attach them not just to one invoice, but two invoices, which were used to create that one deposit. With Business Cloud Accounting, Sage is all the rage. Here we are in our Get Great Guitars Company summary page within Sage. We're going to be now opening up our reports, going down to the report, opening up the balance sheet report. So we'll get that balance sheet report open. Once it is open, we're going to duplicate the tab by mousing over the tab up top, right-clicking on it, and then we will duplicate it. Next, we're going to go back to the tab to the left, do the same thing for the P&L, profit and loss, hovering over the reports, and we want to then pick up that P&L, that profit and loss. Once it then opens up, we're going to do the same type of thing. We're going to duplicate the tab by going over to the tab up top, right-clicking on it, and duplicating that tab. I like to then just check the dates. If I go on back to the balance sheet to check those dates, we're at 12/31/20. That's what I'd like to see. So then I'm going to go to the P&L, profit and loss, and we're starting on 4/1 because that's the month we're working on, April, and there's nothing in after April, so we're good with that one. Back to the first tab, and then we're going to go to our banking information. So we're going to go to our banking information again, and we're taking a look at, of course, at those bank feeds, of which we have two left, two bank feeds to be working with. And so we're going to select those items. So here are our two deposits. Now, let's go back to our flowchart again. I'm going to go back to our flowchart. This is in QuickBooks Desktop, just so we can see the flowchart here. Last time, we were thinking about our flow as if we're moving away from a cash basis system. So instead of us just saying, hey, I'm going to wait till the deposit clears the bank and just record it at that point in time as revenue, what if we have to bill clients with an invoice? So we did the invoice last time, and we can either invoice, then record the receipt of payment, and deposit it into the bank ourselves, not with the bank feed, and then match it to the bank feed. That's one way we could do it. Or we could say, I'm going to send out the invoices possibly electronically and hopefully get paid electronically, and then maybe wait till that clears the bank and then be able to tie out the invoice to the deposit through the bank feed. Bank feed deposit, invoice we manually put in place because it's a non-cash type of transaction. But what if we have a situation where we have an invoice, like multiple invoices happen, and then for some reason they're grouped together in the bank? We deposit them into the bank as a grouped sum, lump sum kind of fashion. Well, that can get a little bit more messy now, because if I wait till it clears the bank, then I'm going to have to match that over to the invoices. I think I started choking there for a second, but I'm back. I'm back here. So we'd have to match those over to the invoices over here. And if it's not a one-by-one kind of match, if I have to match multiple invoices to the deposit, it gets a little bit more difficult. If that is the case, then one way you can alleviate that is to go through the whole process here. You create the invoice. Then when you have the receive payment, you basically record the receive payment not to the checking account, but to like a clearing account, like a cash on hand account. And then when you go to the bank and make the deposit, you transfer it out of that account into the checking account in the same format that it will appear on the checking account. Then when you have the bank feeds, you'll match it out, and you just match out the bank feeds instead of creating the transaction at the point in time it clears the bank. But this time, so we may take a look at that next time. This time we'll take a look at a situation where we're going to try to do that. We're going to say two invoices are going to match out to one deposit. So let's go ahead and do that. We're going to go back on over, and we're going to create our two invoices. To do that, I'm going to create another tab. So I'm going to right-click up top, duplicate the tab, and then we're going to go back to our summary page within Sage by clicking on this little accounting item up top, and that'll take us to our summary page. Now, last time we created the invoice by going to the sales item first up top. Let's try to go over to the little plus button over here this time and create the invoice this way. So I'm going to go to the sales invoice. Let's create a sales invoice. I'm just going to make the same customer, which we set up a very creative name for our customer here. And then I'm going to say tab. We're going to put this in April. So April 2nd. So let's do the 2nd this time. And then we have the product. Now remember, we're not going to be putting in a product. These are things that you could set up beforehand, which would apply out and then apply the correct rate to it, as well as the sales price, account, and cost. We're not going to add that. We're just going to go right to the description. And then I'm just going to say this is item 1. And then note now it's going to the sale of materials, because that's what the default was when we set up the customer. It's not being driven by the product in this case. In other words, typically the product will be the number one thing that drives it, and then it'll default then to the customer. And then of course you can change it if you need to change it here. We're going to keep it at that. And then I'm going to say the first one we're going to say is 10,000 of an invoice. So 10,000, I'm not going to do the sales tax type of thing. But note, obviously, if it has sales tax, we can apply the sales tax. And when the payment came through, it would include the sales tax as part of the payment amount. What's this going to do when we create it? It's going to increase the accounts receivable by the 10,000. The other side is going to go to sales. Now, if we were on a perpetual system, remember, it would also be decreasing inventory recording cost of goods sold. But we're not. We're going to imagine we're on like a periodic inventory system, dealing with inventory by a periodic adjusting entry that we will do manually. So then I'm going to record that, and let's take a look at it. We'll record that. If we then go to the balance sheet, let's make sure it doesn't, hopefully it gives me a green thing that says great. It's going to give me a green thing here that says great. There it is, great. And then I'm going to go back to the balance sheet and just check it out. Let's calculate up top. And we should see the accounts receivable now reappearing at the 10,000. If we go to the P&L, we're going to see that the income is going to go up by that 10,000. So we're going to recalculate here. And it didn't go up, and I think it's a date issue. I think I put the date in the prior month. So let's go back in and just see if we could change the date. And so I'm going to go back to the balance sheet. Let's drill back down on it. So I'm going to go into that accounts receivable and check out what the date is. I don't think it was in April. That's my guess. I don't know what's going on here. Yeah, so I put it in March. So let's see if we can change it. I'm going to go into it, and we'll see if we can edit this invoice and adjust it to April. So then I'm going to go down to the edit. So I'm going to go ahead and edit this item. And then I'll just bring this date up to April. I think I set the due date instead of the invoice date. I want to set the invoice date, and then the due date will be a month later than that. All right, let's try that. Let's update that. And then I'm going to go back and open up the balance sheet for this one because I just messed up the balance sheet tab. So we're great again. So that's good. We're going to go down to the reports. I'm going to open up the balance sheet. So the balance sheet should reappear. So there's our receivable here. That looks good. Now let's go to the P&L, the profit and loss. Let's update this now and see if we then get, there we go. There's our 10,996. Now I'm going to go back to the sales item, this tab to the left. Make the second invoice that we're going to match out. So I'm going to do this again. I'm going to say, okay, we're going to make another one, and we're going to do it better this time so I don't mess up the date. We're going to make it be perfect the first time around. And then this is going to be A, so the customer, and then, so the customer we're going to set up is that one. I'm going to set the date for April 1, and there we have that. And then I'm going to say this is item 2 on the description. Let's go into that account. That looks good. This is going to be for the 7,000 because we're trying to tie out to that 17,000 with the 2 invoices. Last one was 10,000. This one's 7,000. Same process. What's going to happen? It's going to be increasing the accounts receivable. Other side going to the revenue account. So let's go ahead and record that and check it out. Hopefully I did it correctly this time. See if it gives me the green thing of approval, the green greatness of approval. There it is. Let's go over to the balance sheet then and check out what happens here. I'm going to recalculate it. This one's going to go up by 17,000. That's what should happen. So there it is, 17. It's going up to 17,000. It went up by 7 to 17,000. Okay, then let's go to the profit and loss. This one should go up by 7,000. Calculate that. So there we have that. All right, now let's go back over to our bank feeds where we got the deposit. When we get the deposit, what's going to happen? What's normally going to happen? Well, the deposit's going to be for the full 17,000. So we need to decrease the accounts receivable and put it into the checking account. That's what the deposit's going to do. But we have 2 invoices that we need to tie out for it to do that. So I'm going to go back to the first tab now. There's our deposit. So we need to put this, I'm going to say we need to match this out. Now, when we match it, we're not matching it to a deposit. We're actually creating another invoice. And then I got to go down here to our list of invoices and find the invoices that kind of match out to it. In this case, it's obvious because we only have the 2. I could say just pick up those 2 and that's it. So in that case, if it's not too cumbersome, it's pretty straightforward. We could do that. But you can imagine a situation where you have a lot of invoices, especially invoices that have been outstanding for a while or something like that. This process can get more detailed quite quickly. If anything over 2 invoices that you have to start matching up in order to match up to the deposits, that's when I would recommend possibly you might thinking about another system because it might even save time to go through like a clearing account. And we'll take a look at that next time. But if you can match them out in this way to one deposit, two items there, then go ahead and do that. You want to try to think about your system. Whenever you think about your system in the deposit side of things, you would like to be depositing it into the system in the same way that you're going to see it on your end. So just keep that in mind. Next time we'll think about a system where if it's more complex than this, we can go through a clearing account for it. So let's go down and I'm going to say this is paid by electronic and electronic for these two. And these are going to be the transactions. We are creating a transaction now, and the transaction is going to be now decreasing the accounts receivable and recording the other side to the cash account. So I'm going to go ahead and match that to do that. And then let's see what happens if we go back to the balance sheet. Once I hit calculate, this accounts receivable will magically disappear. Checking account should go up by that 17,000. Let's check it out. Calculate. Accounts receivable gone magically. We go into the checking account then, and we should have our deposit of the 17,000. Scrolling down, there it is. There's our 17,000. And nothing is happening at this point on the income statement because we already recorded the increase in the sales on the income statement on an accrual basis when we created the two invoices. So that's going to be it for now. Let's get out of here.